Medical Properties Trust is down 61% in the past 12 months, and 21% of its shares are now shorted. MPW was offering a juicy 15% starting yield this past week, but just how safe is that dividend? Well, with 440 different properties and being involved in a business segment that's never going to go away in healthcare real estate, that dividend has to be pretty safe, right? Unfortunately, it's never a good sign that a leading securities fraud law firm is now investigating the company on behalf of its shareholders to see if the company violated federal security laws. Oh wait, it's not just that one law firm, it's another law firm that specializes in recouping money for the institutional investor in case a company is committing fraud. Uh-oh, don't look now, but I just found a link to another law firm doing the same thing. And if you search this on Google, you will find a bunch of other law firms doing the same exact thing. They all mentioned that on February 23rd, 2023, MPW disclosed an impairment of about $171 million on its 4 properties that they leased out to Prospect Medical Holdings, and they also wrote off about $112 million in unbilled rent for the same client. Now that's a significant amount of money for a $4 billion market cap company. An impairment means for whatever reason, the value of the real estate that Medical Properties Trust owned has declined significantly to the point where it must now be reported on a company's balance sheet. And this non-cash charge on the income statement reduces earnings. That's certainly not good news for investors, and now we're wondering what happened here. But this is just one of the many issues plaguing MPW. They've also had some of their tenants in financial despair, and a real estate company is only as good as the monthly checks it's able to collect. There's some serious concerns that MPW might not collect any rent from Prospect in 2023. Their largest single tenant, Steward, is also in a solvency crisis and has had to unload an operation in Utah for rent money. 60% of MPW's rent revenues came from just 5 tenants. Steward Capital was 26% of that total, and the struggling Prospect Medical was 12%. If over 1/3 of rent is in serious jeopardy, you gotta wonder if that dividend is next. The company gave guidance in 2023, and one of the forecasts had a situation in which Prospect wouldn't pay any rent this year. MPW also makes money through property acquisitions and sales. It buys healthcare facilities that might have the potential for long-term capital appreciation. Now that all sounds good, right? Except that MPW has also taken on positions of equity interest in its own tenants. This can certainly lead to a conflict of interest, and MPW giving out loans to its biggest tenants who already had financial woes, it just makes it look like they're giving out these loans so that they can pay rent back to MPW, and that's not a good look. MPW's balance sheet shows $10 billion in long-term debt with a 3.6% weighted average. That interest rate isn't terrible, but that's a lot of money that they're going to be having to spend repaying creditors that could have been spent on growing their business or growing that dividend. Hence, to pay off that debt, it could sell more properties, which will hurt MPW in the long run as that's less cash flow coming in. They may have to slash the dividend, or they might dilute shareholders by issuing more shares, which it already seems to be doing. Since 2019, there's been a staggering 57% growth in their amount of shares outstanding, which means each individual investor's shares are now worth that much less. Although MPW did have an impressive track record of growth and paying dividends since it became a public company in 2005. In fact, from 2005 to as recent as January 2022, MPW was destroying the market with a total return of 642% compared to the S&P 500's 425%. But man, oh man, what a difference a year makes, and now I have some serious concerns about their latest financial statements. They had less funds from operations for the full year compared to last year, and their quarterly FFO was just 21 cents. Keep in mind, MPW pays out 29 cents a share per quarter, so how are they funding that other 8 cents? I sure hope it's not with more debt. Now, high interest rate environments like today, they really hurt real estate companies as borrowing costs become that much higher. Another thing that really worries me about MPW is that there's no buying from MPW's executive board. Even with these low prices that we're seeing today, the only thing I see by the executive board is them selling their shares. Now, there's a lot of reasons why somebody on the executive board might sell their shares. It doesn't just automatically mean that they think the stock is doomed. A lot of times the executive board only gets paid in company stocks, so selling stock is the only way that they would actually be able to exchange that for actual money. But if you knew your company was valuable and was trading at a discount, wouldn't you want to buy more shares? Compare this to a company like SoFi, where their CEO is actively buying more and more shares because he thinks the company stock is undervalued right now. Seeing no buys makes me think that management is hiding something, and that's why they're not scooping up more shares. There's also a research group who specializes in short selling called Viceroy, and they have been putting out a couple articles on why they think MPW is a shady company, and this includes hiding past unbilled rent write-offs, Steward being in even more financial hardship than MPW is leading on, MPW paying considerably more than the market value of the real estate in their transactions, and so many more other allegations. But also keep in mind that Viceroy has a short position in MPW. So they're going to be making money when MPW goes down in share price. So the more bad news that they put out there, the more that's going to impact MPW's share price. So don't take everything that Viceroy states as fact. In fact, MPW just filed a lawsuit against Viceroy Research on March 30th, claiming Viceroy is in the business of serial short and distorted attacks against public companies and that MPW is their latest victim. They claim their playbook is taking a short position, then publishing false research and spreading it through social media to gain a profit when the stock drops. The lawsuit claims that MPW has had to increase physical security at its Alabama headquarters, and some people no longer even want to do business with the company because of these allegations. Now, MPW also counters a lot of the allegations Viceroy makes in this 45-page document, and a lot of it is personal attacks on the people behind Viceroy and how they are unqualified to be doing their job. For example, they mentioned the main dude who runs Viceroy used to be a social worker in England, and he later lost his license because he sucks so much at his job. Quick, call a social worker! Anyway, a lot of rebuttals and attacks are in this lawsuit. I'd say this is a step in the right direction for MPW, as they want to highlight to the public, hey, we're a legitimate company wanting to acquire real estate, we have a really good portfolio, and we're trying to reduce exposure to some of our largest tenants. This is a huge one for me as I'm an auditor myself. PwC, one of the most prestigious auditing firms in the world, has been auditing this group since 2008, and they reaffirmed that the REIT's financial statements are compliant with GAAP accounting rules. So they're not just fudging the numbers however they see fit. They also state it's not possible to round trip their revenue. This is what I was talking about earlier with MPW taking out an equity stake in their tenants and then those tenants using that to pay their rent. They state that this is impossible because they use third parties to build or acquire properties, and that sale-leaseback transactions are actually quite popular in commercial real estate. A company is never obligated to pay a dividend, but a REIT like MPW is required to pay out 90% of their taxable profits to its shareholders. Even with a 50% dividend cut, MPW would still be paying around a 7% starting yield from today's prices. It's also important to note that today's prices, they reflect a lot of fear and uncertainty with the stock already priced in. The market is always forward-looking, so if MPW is able to clear these problems with its distressed tenants and prove the short sellers wrong, people buying at today's prices, they may walk away with a steal and a home run of a stock. I've been an MPW shareholder since 2018 and have collected dividends every single quarter ever since, and I sure hope that streak can continue. Now, I sleep real good at night because even though I own well over 125 shares, it's less than 1% of my portfolio because I spread my investments over dozens of great companies and ETFs. If you ever want to see my full portfolio, make sure you click that link in the description below. Hit that like button. This video took a lot of time for me to put together. I wanted to be quick about MPW striking back, doing their own lawsuit. So make sure you're subscribed for more updates, join the Dividend Discord. My videos are always found in podcast form under the Collect Cash podcast name, and I will buy, stash, and collect cash you later.